What up, y'all? It's been a minute since we've done one of these, so today I want to talk about something that I've probably talked about too much at this point, but given the way that things have changed over the past few months, I still feel like deserves a little bit of attention. You're watching Sekkido, and today we're focusing on recent changes to Korea's CPI, which means that once again the topic of discussion is inflation. Alright, so let's start with the numbers because without data we don't have much to stand on. For that purpose, we're looking at the Consumer Price Index, or the CPI, although many investors are likely to be interested in the Producer Price Index, also known as the PPI. I think most listeners here are consumers more than they are producers, so how these prices affect the cost of living are probably a lot more important. When we talk about consumer prices, we're talking about the cost of goods and services like food, clothes, education, and other categories in this graphic from Investopedia. So if you're not entirely sure what the CPI actually refers to, this is what it is. Alright, now as we may or may not remember, prices in 2021 saw a little bit of a jump from the year before. Generally, 2% inflation is the standard goal or restriction depending on what's going on in the economy at the time, but 2% inflation is really what the general aim of the most national banks is. In 2021, we saw a growth of 2.5%, largely in part because the year before, when COVID was at its strongest, we saw a little bit of deflation where the price of many things actually dropped. Now, problems didn't really start until last year when a steady return to normalcy saw inflation more than double. This rapid growth in demand led to things like shrinkflation, where goods stayed the same price but got smaller. We saw a massive jump in gas prices, and we also saw energy costs starting to soar. Luckily for us during that time, KEPCO didn't actually bump up the price of electricity, though they have done that in recent months. Now, based on the numbers that we have, consumer price growth is beginning to slow down significantly. Specifically, we can point to things like a month-to-month slowing in the rise of electricity, water, and gas prices, and a declining cost of imports as shipping rates, which were, by the way, at extreme highs during and after the height of the pandemic, continue to drop. The rise in service prices is to be expected when considering inflation in production costs, but this rise is tame when compared to the other larger factors previously listed. Now, some big and hopeful news for many was the slow but steady decline in housing sales prices, jeonse prices, and rent prices. Given that some of the largest monthly payments that people will make go directly to their living expenses, this is a bit of a bright spot for renters. Now, the numbers did decrease by roughly 1%, sometimes a bit above and sometimes a bit below, in spite of the transaction volume taking a drastic pullback in previous months. While the differences here have also bounced, we're still seeing a decrease in the housing market after what has been an extremely prolonged boom. Now, this is all to say that inflation is still inflating, but with significantly fewer increases to the interest rate expected on the horizon, consumer price growth is expected to slow down throughout the year, which is good since that means a slowing of price growth for us. Still, it is important to note that inflation is still much higher than we actually want, and it's expected to remain so for the midterm. Additionally, loans will continue to be expensive and difficult to get, especially for us, which is another way of slowing down inflation as it gives people less spending power, but how effective this will prove to be is still up in the air. Now, one thing to note is that as of Tuesday last week, which would have been, the 16th, electricity bills are to rise by 5.3%, and although I did mention that the cost of electricity has been dropping, the actual electricity rate that we've been paying in terms of kilowatt per hour hasn't been very high. KEPCO has been putting off rate hikes for a very long time as it's still a public company and it's still tied to the government, so it's caught in kind of this political hell where they are constantly losing money. And while that means that the public is losing money since it's mostly a public company, it's losing money in a way that people who only really pay attention to KEPCO's business side really notice. But as with any direct cost, a rate hike is immediately reflective of the current administration, so they always kind of remain under political sway. So real talk, the fact that we're getting a rate hike right now that's 5% is not surprising. It's unfortunate, but it's been a long time coming. All right, that's it for me. We're at 5 minutes. I hope y'all are doing well. Take it easy. All the best. Peace.